Markets are hitting record highs, but just as quickly, warning lights are flashing across the financial world. Stocks are wobbling. Nvidia's powerful earnings failed to dazzle Wall Street. UK banks were crushed by windfall tax fears, and the Federal Reserve's next move could determine whether the economy keeps humming or stumbles into chaos. This script will guide viewers through the complex web of today's market storylines, how Nvidia's AI dominance both thrills and terrifies, why strong US GDP growth hides dangerous imbalances, how UK banks lost billions overnight, and why the Fed is caught in a high-stakes balancing act. We will connect these events to historical lessons, from past stock bubbles to banking collapses, showing why every headline today could be the start of tomorrow's The Market Rollercoaster. Stock markets across the world have been on a roller coaster. On one hand, indexes like the Dow Jones, S&P 500, and Nasdaq have reached record highs powered by investor enthusiasm around artificial intelligence, strong corporate earnings, and resilient consumer spending. But beneath that optimism lies unease. U.S. futures slipped after Nvidia's results failed to spark more excitement, signaling that expectations may already be too high. This is a classic sign of what traders call being priced for perfection. When expectations are sky high, even stellar performance may not be enough. We'll explore how this dynamic plays out historically, drawing parallels to the dot-com bubble in 2000, when companies beat earnings but still saw stock declines because investors expected the impossible. We'll also unpack why investors are now shifting focus toward the Federal Reserve's inflation data, Nvidia's double-edged sword. Nvidia remains the undisputed champion of the AI boom. Its chips power the largest data centers in the world, driving generative AI, machine learning, and countless industries. The company's latest earnings showed breathtaking growth, yet the stock still dipped. This paradox reveals the delicate psychology of markets. It's not just about performance, it's about expectations. Nvidia's dominance is also a geopolitical flashpoint. Restrictions on chip sales to China threaten billions in revenue, and governments worldwide are scrambling to secure supply chains. This section will explore not just the numbers, but the bigger picture. What happens if AI infrastructure becomes the next battleground of global trade wars? We'll connect this to past tech booms and busts, asking whether Nvidia is more like Cisco in the UK banking sector bloodbath. In London, billions of pounds were wiped from the value of major banks in a single trading session. Fears of a windfall tax targeting profits gained from quantitative easing sparked panic selling. Lloyds, Barclays, and NatWest were among the hardest hit. This isn't just about taxes, it's about trust. Banks are symbols of financial stability, but history shows how quickly confidence can evaporate. From the 2008 financial crisis to the run on Northern Rock, the UK has seen firsthand how fragile banking can be. At the same time, business confidence surveys in the UK rose, showing a strange disconnect. While banks crumble, businesses feel more optimistic. We'll unpack this paradox and what it means for investors. Is the UKT the Fed's crossroads? All eyes are on the US Federal Reserve. The personal consumption expenditures, PCE index, its preferred measure of inflation, is due soon. If inflation cools, the Fed may finally cut rates, potentially sparking another rally. But if prices remain sticky, the Fed could hold rates higher for longer, slamming the brakes on growth. This balancing act is one of the toughest in history. Cut too early and inflation could reignite. Wait too long, and the economy could slide into recession. We'll compare this dilemma to past Fed decisions, Paul Volcker's aggressive hikes in the 1980s, Alan Greenspan's caution in the 1990s, and Ben Bernanke's moves during the 2008 crisis. The lesson? Every Fed move is a gamble, and today's gamble, what happens next? The market is a battlefield of narratives. Nvidia's growth versus regulation, US GDP resilience versus household struggles, UK banking collapses versus rising business confidence. The Fed's possible rate cuts versus inflationary risks. Each storyline is a coin toss, both opportunity and danger. In conclusion, we'll stress that this moment in history feels like standing on a tightrope. One misstep could send markets crashing, but balance could deliver years of prosperity. For viewers, the key is to stay informed. Question the, if you found this breakdown useful, hit like, subscribe, and share your thoughts in the comments. Do you think Nvidia can keep its crown? Are UK banks finished or just facing a temporary storm? Will the Fed cut rates this year or push us into recession? Your take could be featured in the next video. Stay tuned because tomorrow's headlines may be even bigger than today's. This is Felix. See you next time.